first up, Chinese policymakers have pledged more efforts to sustain economic recovery next year, but the Central Economic Work Conference noted challenges ahead. Zhang Chunying has more.
Advancing progress while ensuring stability was the general principle underscored at the Central Economic Work Conference hosted on Wednesday. One of the key takeaways from the meeting signals China's commitment to spurring domestic demand, bolstering the economic recovery in 2024, and tackling challenges like insufficient demand, weak social expectations, and overcapacity in certain industries. Officials say they will implement a proactive fiscal policy and a prudent monetary policy, which they describe as flexible, moderate, precise, and effective. Analysts see ample room for fiscal stimulus and accommodative monetary policies in the coming year, given the carefully measured policies implemented this year.
Official interest rate minus the inflation rate that give you the real interest rate is about 3%. In terms of real interest rate, China is actually one of the higher interest rate in the world compared to the other countries, because they have much higher inflation. So I think the monetary policy can get more accommodative in the coming months, and also interest rate cuts and triple cuts are on the cards.
Next year, a new round of fiscal, financial, and institutional tax reforms is scheduled, with a focus on encouraging the expansion of venture capital and equity investment. Addressing concerns about China's housing sector, which has drawn global attention in the past year, the government pledged to speed up a new model of real estate development and manage the resolution of local debt risks. The meeting also outlined the path forward for sustained opening up, emphasizing the reinforcement of industrial and supply chain resilience while fostering the development of private firms.
It emphasized on giving equal access to financing for all real estate developers, regardless of ownership. It's emphasizing on opening up the business sector to make it easier for the foreign businessmen to come do business in China. So I think all in all, it's once again, I think overall it's a satisfactory meeting, giving guidance for next year and also for the way forward.
And the meeting also touched upon the improvement of people's livelihood. It says it is going to accelerate the construction of affordable housing and to ensure the stable and secure supply of food and other agricultural products. Zheng Chunying, CGTN, Beijing.
Okay, for more on China's economy, Dan McClory joins us, Managing Director, Head of China for Boustead Securities from beautiful Irvine, California, just a little south of LA. I was just there not too long ago. Let's talk about China's economy. In 2023, they faced significant pressure. We had the issue with the real estate. Then you had domestic consumption. We had the coming out of the pandemic, and the list goes on. Then there was also the talk of stimulus to try to get things back into place again. Let's start with the takeaways from the conference. What did you hear that you liked?
Well, first, Phil, thanks for having me on your show. Always enjoy it. I think the conference was high on attempts at confidence building, but very low on actual tangible policy. And there were some missed expectations. I think, touching on some of the themes you mentioned, there was the expectation of some type of a policy-driven stimulus, none. There was also word about the supply chain. The supply chain, because of concerns and geopolitical considerations, is really, really challenged. The property market was talked about in terms of social housing, but not really much on some of the major financing restructural work that's having to go on right now. So I think a lot more could have been said and probably would have persuaded the financial markets to have been less brutal.
Right. I mean, Dan, isn't that basically the problem in 2023? Is that some international investors and experts, while China is saying the right things, they're expecting perhaps a more forceful push when it comes to stimulus, or more forceful push when it comes to reforms. Is there anything in particular specific that you think the international community would like to hear more of, or perhaps see more emphasis on?
Absolutely. Again, in sort of a more westernized approach, whether it's the EU or the US, and every market is different, but a fundamental policy stimulus that speaks to the problems that are taking place in the real estate sector right now. whether it's forgiveness, whether it's reduced rates, whether it's forbearance, but something that really comes out and grants relief to a lot of the parties that are under pressure and under stress. That would be one to begin with. And I think other measures to stimulate consumer growth. It's been weak coming out of COVID. And so other measures that could help do that would be greatly welcomed, would be applauded, and would be rewarded with share prices of various Chinese companies going up instead of going.
Sometimes I wonder, Dan, if maybe you as an investor or we as investors in general expect too much, because you think back at the financial crisis in 2008. The U.S. we dealt with a huge real estate problem. Then you had the European markets that dealt with sort of the Greece issue and the Italian issue and so on. They had their own problems, and ultimately governments tried to step in and do a lot. And granted, there was some restructuring all around, but ultimately the thing that helped the most was time. And time does heal a lot of these wounds. Are we all expecting too much too fast? Hey, there's this problem, you got to do this to fix it immediately.
Yeah, I would say that's potentially correct as it relates to industrial output and consumer demand. I think the property sector is one where it's worsening with time. It's not getting better, and the local government debt, the same story. But I think in terms of the consumer sentiment ultimately returning after that, coming out of COVID rejuvenation that existed in China, that would be one where I believe time results in a better outcome. In terms of the modernizing the industrial policy and modernizing the industrial output, those are some high-profile, high-impact industries that China has prioritized, and they bring with them a host of sensitivities, again, geopolitical and otherwise, that are somewhat beyond China's control. So.
Right.
It's better than being into furniture and electronics and perhaps solar panels. But, they're really stepping into an area where the supply chain restrictions and perhaps obstacles are formidable.
Yeah, we talked about real estate a number of times here, and you brought this up again on something that they should address immediately. Is there anything specific? I mean, some have talked about the banks, perhaps, I guess, bailing out some of the developers. But then you think, well, if they do that, then maybe the banks would need to be bailed out as well. And so you run this risk of where's the backstop in all this? And then there's also then the buyers and consumers. Once you see prices stop going up, there's also a psychology to investing as well, right? Right or wrong, if you don't see prices going up, you begin to have these negative thoughts come into your head, and then that really does take time.
Yep. Well, let's tie in that kind of property in terms of the property developers, and then that consumer, like, would be great to get consumers buying real estate again in China. So I think you got to start with policy measures that, for example, where a family has put a deposit months in advance of ground even being broken on a real estate development to buy a home, and then that property developer is going out of business and their money is lost. Those people need to be made whole in some way, shape, or fashion. I think a purging of the system and understanding that a market economy exists, and if your debts exceed your assets or your cash flow and your ability to repay them, there's a consequence for that. I think that has to be shown, because that will result in wiser decisions being made going forward.